Good morning, good afternoon, good evening. Welcome back for another video. I know it's been a couple weeks, and if I could describe what these last 2 weeks have been like, I would just simply say I'm married with 6 kids. I am the sole provider for my family by choice, and I am like a worker ant preparing for the winter, and I think you should be too, unless you are in a very secure financial position. Because I've said this before, I'll say it again. You know, starting with Silicon Valley Bank, that was the canary in the coal mine. Things are going to get ugly, and it actually may be very soon. And I want to show you this video to illustrate what I'm talking about. I saw this on Twitter. I shared it on my Twitter account. But this is a visualization of the U.S. regional bank crisis. And so we're not talking about the big banks like JP Morgan Chase or Bank of America. And what we're seeing here is regional bank returns. Now, here's the alarming part. Since April 28th of 2023. So we are looking at a chart showing returns, regional bank returns within the span of a week. And you can see last week was just a really ugly week as we're starting to see the dominoes fall. So we saw First Republic Bank get absorbed by JP Morgan Chase. And we're seeing all these regional banks, aside from just a couple up here, just really starting to sink. And so we have PacWest is in the worst shape here. Western Alliance, First Horizon, Home Street, Metropolitan Bank, First Foundation. You see a lot of banks here, and you see just a handful of banks that are actually in profits. And so what is going to happen here? We can let all these regional banks fail, but when you saw Silicon Valley Bank and the 4 other banks that collapsed with it, what you saw was a pretty sharp drop in Bitcoin and in other asset classes. And then you saw a sharp rise as we learned that the Fed injected $300 billion onto their balance sheet. They added, over a span of 2 weeks, $400 billion. And so that was just from a handful of banks, one of them being the 20th largest bank in the country. How much more so, and on what kind of time scale are we seeing with all of these regional banks suffering the way that they're suffering? And this is all the Fed's doing. Because if you remember, all right, I remember early 2022, here's what I thought was going to happen. I thought the Fed was going to raise something like 25 basis points a quarter. And that did not happen anywhere near that. Looking back on it, it seems like I'm crazy for even suggesting such a thing. That is historically around the level of aggressiveness that they had raised rates before. But of course, we had not seen 9% inflation since the 70s. But, even the most aggressive forecast that I saw in early 2022 when it came to raising rates was 25 basis points per Fed meeting. That would put us at a federal funds rate of 225 by the end of the year. And instead, what we saw was 50 point and 75 basis point increases throughout the whole year, to the point where these banks, which were told by the Fed to buy treasuries at 2% annual return, a 10-year bond at 2% annual return, those bonds are underwater. Think about this. How much would you pay for $100 worth of a bond that these banks hold? A 10-year bond. Let's just say 10 years getting you 2% annually. That's just the number I'm throwing out. 10 years, 2% annually. How much would you be willing to pay to take that off of their balance sheet? Honestly, I wouldn't be willing to pay anywhere near $100. I don't think I would be willing to pay $50 for the commitment to hold that bond for another 5 years, because I think, or for another 9 years, because I think 9 years from now, that $50, I'll get $100 plus 2% annual returns. Let's say $120. That the $50 now is worth more than $120 9 years from now. Maybe. But that's what they're facing. They either have to hold these and wait for these bonds, for the federal funds rate to go back down to zero, or they need to sell them for much less than they're worth. But I'm saying to you right now, I'm not willing to buy these bonds for half of what they're worth. And so that's the bank crisis in a nutshell. Markets in Mayhem, follow them on Twitter. I don't know much about them, but that's where I saw this visualization. And that it wasn't even, there was 17 seconds left in that video. That's a week. That's a week of losses. I mean, I would be shocked if something didn't happen, something crazy didn't happen within the next week or two. I just don't know where do we go from here. And so what does that mean? Well, remember this chart. So we saw the Fed balance sheet balloon over the span of, over the time of COVID. They just shot up big time. And then quantitative easing, they introduced that. We peaked sometime in 2022, middle of 2022, they started tightening. And then we got to this point when Silicon Valley Bank collapsed, where we injected $400 billion, which we tightened $600 billion in the span of 6 months, or a little more than 6 months. And then we undid that in a span of 2 weeks. And now we're tightening again, to be fair, a little bit more aggressively. But what happens when we've got to rescue all these regional banks? Are they just going to be bought by Chase, by Bank of America? Excuse me. Or is the Fed going to have to inject even more money onto their balance sheet, into the system? It could be one of both, or it could be both at the same time. But the estimates that I'm seeing, and I'm seeing this all over the place, is that what we're going to have to do is add trillions upon trillions of dollars into the system. And so what does that mean for Bitcoin? That means that I'm bullish on Bitcoin. I am bearish. I want to say this. Looking at this chart and remembering what happened with Silicon Valley Bank, we saw bleeding happen. We saw almost catastrophe happen before we bounced right back. And I would expect something similar to happen with Bitcoin this time around too, where we dump. It feels like we're teetering, about to collapse, and then money printer, boom, we go higher. We go the next leg higher. I'm not talking about all-time highs, but the next leg higher on the chart. And so I'll get back to the chart. I want to talk about that. So putting new all-time highs in the Fed's balance sheet, adding trillions of dollars, and seeing where we go from there. I think that's going to be very bullish for Bitcoin. I am unbelievably bullish on gold. I'm not going to pull up a chart. Look at a 40-year chart, and you will see something massive forming for gold. Once it breaks through its all-time high, it is off to the races for gold. I am so bullish on gold right now. I like Bitcoin more. I blame nobody for liking gold more, but I'm bullish on both. So looking at what's next for the Fed, they have claimed that, at least hinted that this is it for raising rates. I would be shocked if the next Fed meeting in June, they raised rates another 25 basis points. There's an 88% chance, according to the CME FedWatch tool, that the Fed is going to raise rates, to not raise rates, and a 12% chance that they're going to raise rates by 25 basis points. And so that's another reason to be medium-term bullish, short-term bearish because of all this banking crisis stuff, medium-term bullish. But looking at the chart here, I want to point out these levels. I say this every time I make a Bitcoin video. I created these levels around the first week of January, but I added 2 green lines just to separate them. These new levels are levels that I think that we're going to see as support and resistance. So up top here, we have $31,000. That's where we peaked on April 14th of 2023. And around here, we have several areas of confluence here. At around $27,000. These 2 new levels are levels that I've added. I think if we lose this level, which I actually could really see happening, that we have a lot of support right around here. Another bounce off the bull market support band, $25,000. If we lose $27,000, my opinion, we're going down to $25,000. That's going to be a fantastic place to buy Bitcoin. And, looking at the chart here, I would love to see something like that happen in one regard, and that's simply looking, let's continue to ride the bull market support band. And so I have 2 things in mind when I say that. I have 2019 in mind, which this rally that we've seen since January 1st is very similar to 2019 in the sense that, we're in a mini bull run within the bear market, a bear market rally. But what we saw in 2019 was that Bitcoin got too far gone from its bull market support band and just it exploded in price up to $14,000, but it got too far gone from the bull market support band. So the logical next place for it to go after it went to $14,000 was right back under the bull market support band for a small season of bearishness before the COVID crash. And then we had to wait several months for Bitcoin to get back above the bull market support band and for things to start rising. And so 2019, this is not looking quite like 2019 in that regard. If we just continue to ride the bull market support band, this could be the trend until the next peak. This could be the trend over a couple of year period until Bitcoin peaks again at the peak of the next bull run. And so this may be, and why I'm saying this may be a fantastic opportunity over the next couple of years. Buy, no, not financial advice, buy when you see Bitcoin get to the bull market support band. If you see it rise aggressively, be cautious. You see it come right back down, or the bull market support band rise to that level, that's when you start buying again. Open some longs. That is my strategy until one of two things happens. One, we go too far gone. We see Bitcoin shoot up to $50,000 in the span of a month. Then I'm just selling. Or two, we see the bull market support band lose its support. Otherwise, this is the name of the game for me. This is the name of the game. Now, one thing I did say I'm short-term bearish. One thing that I'm just keeping in mind that could potentially be bullish is Wednesday. We have the CPI report coming out. So Wednesday CPI report's coming out. What's the significance of that? I mean, I know we're all paying attention to the CPI report, but last time CPI report came out, Bitcoin was right about here, struggling to hold $20,000, looking, people were opening up those new calls for $10,000 Bitcoin. CPI report comes out, boom, we're off to the races. And then the next time that the CPI report came out was right around here. We were struggling to break through $28,000. And then actually, you know what? All right. Previous time that the CPI report came out, we were struggling. We had been struggling to break $25,000. And then here we were off to the races. Still same deal, off to the races, going to the next level. And then that next month we struggled at $28,000 until the day the CPI report came out. And then boom, we were off to the races to the next level. And so CPI report comes out again. What we're going to see most likely is inflation is continuing to fall. The market's going to respond well to that. And so who knows, maybe we'll get right back up to $31,000. I wouldn't be surprised if we did not break through for May $31,000 or $32,000, but that we just kind of held on to this level until maybe June. I do believe we have another leg up, perhaps the $35,000 to perhaps the $42,000, but that is my expectation. The thing I'm wondering is that we're holding within this range from the worst case scenario around $25,000, best case scenario $32,000 until the following month's CPI report at the absolute earliest. But things could get volatile given all that we already talked about with the banks. And so I'm going to try to be here as much as possible, but again, I'm waking up at 4:30 every day, getting to work, working my butt off, trying to make money, trying to store up whatever I can for what I think is a winter that's coming economically, in which gold and Bitcoin can do very well. But that's just my opinion. I'd love to hear your thoughts in the comment section of this video, and I will most certainly be seeing you in another video. Peace.